From the Lever's reader-supported newsroom, this is Lever Time. I'm David Sirota. President Donald Trump and Federal Reserve Chairman Jerome Powell are dueling over interest rates. But media outlets, political pundits, and even former Fed chairmen have been saying that Trump's pressure is an inappropriate assault on Federal Reserve independence. They argue that America needs a central bank leader who's politically insulated and can therefore make tough interest rate decisions that the public may not like, but that are supposedly good for the economy. But is letting an all-powerful bank heavily influenced by Wall Street, a bank shielded from public accountability, is that really good for democracy? And considering all the financial crises, meltdowns, and bailouts over the last few decades, has so-called Federal Reserve independence actually been good for the economy? And why are so many in media, politics, and big business so afraid to even discuss these questions? Today on Lever Time, I talk to two provocative economic thinkers about what's really at stake in this battle between Trump and Powell, and what this clash over the Federal Reserve actually means for millions of Americans. That's all coming up on today's episode.
Whose chopper is this?
Zed's.
Who's Zed?
Zed's dead, baby.
Zed is dead, and the same might be said of the Federal Reserve Bank. The Fed's dead, baby. Or at least the current version of the Fed is about to be dead, because in the next year, President Donald Trump will get to appoint his own chair of the Fed after running his chopper over the current chair, Jay Powell.
If we cut our interest by 1 point, we save $300 billion.
That's Donald Trump on June 12th during a bill signing ceremony.
Equivalent. We're going to spend $600 billion a year, $600 billion because of one numbskull.
That numbskull he's talking about? The chairman of the Federal Reserve. President Trump has not been a fan of the current Federal Reserve Chair, Jerome Powell, despite the fact that Trump appointed Powell in 2018. One of the main powers of the Federal Reserve is its influence over short-term interest rates. Trump wants Powell to lower rates, in part to help refinance the trillions in debt coming from Trump's tax cuts for the wealthy. Powell is resisting, wanting to wait and see how Trump's tariffs impact the economy before making any changes to monetary policy. When asked about the president's criticism at an event earlier this month, Powell responded by saying,
"I'm very focused on just doing my job."
Trump is continuing to ramp up pressure on Powell. Most recently, Trump attacked Powell for going $700 million over budget on renovations to the Federal Reserve's Washington, D.C. headquarters. But the Fed's lavish renovation is really the tip of the iceberg when it comes to a case against Powell. As Federal Reserve Chairman, he's been explicit that his goal is to drive down workers' wages.
Get wages down and get inflation down without having to slow the economy.
Powell has spoken out against wage increases for average citizens while refusing to implement a federal law designed to rein in the executive pay of his former colleagues on Wall Street. Worse, Powell's been demonizing higher wages while jacking up interest rates, a policy that's been portrayed as anti-inflationary, but that might actually exacerbate inflation in some big ways, because the price of money is somehow not included in the Consumer Price Index. When Powell increases interest rates, the price of stuff like home mortgages and home prices and car loans and car prices can go up. The interest you pay on your credit card can go up. But somehow, impossibly, this isn't included in the government's calculation of inflation. Meanwhile, as the nation's top bank regulator, Powell and his Federal Reserve have made some epic mistakes.
A rough week for the banking industry.
The collapse of Silicon Valley Bank. The second biggest bank collapse in U.S. history.
The Fed approved Silicon Valley Bank's merger in 2021 and reassured the country that that bank posed no systemic risk to the economy. But then, as the Lever reported, less than 2 years later, the Federal Reserve insisted that the same bank's collapse was a systemic risk to the country, which justified a bailout of its depositors. Under federal law, the president does have the authority to fire a Federal Reserve chairman for cause. Some might argue that there's a very strong case that Powell's policies and his decisions have been fireable offenses, regardless of whether it was President Biden or President Trump doing the firing. But even bringing up that law and the whole debate over whether or not Trump should fire Jerome Powell, that's raised much larger questions about the Federal Reserve, this mysterious, all-powerful institution wrapped in secrecy and insulated from political pressure.
I think what we need to do is examine the entire Federal Reserve institution and whether they have been successful.
That's Trump's Treasury Secretary Scott Bessent on CNBC. Bessent later said he didn't think Powell should immediately step down. Trump himself is now saying the point is moot, because Powell's term is up next year and Trump will get to appoint his own guy anyway.
I think he's done a bad job, but he's going to be out pretty soon anyway. In eight months, he'll be out.
Regardless of Powell's fate, something bigger is at issue here. The whole idea of the Federal Reserve as an independent entity, which Bessent and Trump seem to be suggesting is a big problem.
Has the organization succeeded in its mission? If this were the FAA and we were having this many mistakes, we would go back and look at why has this happened?
Whether or not you like or hate the Trump administration, it's clear that the era of insulating the Federal Reserve from political accountability has coincided with some pretty bad stuff. Stuff like financial crises and runaway inflation that's hurt the entire economy, vastly exacerbated economic inequality, and enriched the already rich. As the controller of the money supply and chief bank regulator, the independent Federal Reserve was supposed to prevent those things from happening. But defenders of the Fed say independence is the solution, not the problem, and enshrined in statute, as Chairman Jerome Powell recently insisted.
Our independence is a matter of law.
Earlier this week, in a New York Times op-ed, former Fed chairs Ben Bernanke and Janet Yellen backed Powell up, writing that, quote, preserving the Fed's independence from politics is not about protecting a few individuals or a Washington bureaucracy. It's about protecting America's prosperity. Meanwhile, Trump being the one to challenge Fed independence has renewed legitimate fears that this is part of his administration's larger authoritarian power grab, in which we've seen him fire the heads of independent agencies like the Federal Trade Commission and the Consumer Financial Protection Bureau. As we're recording this episode, the Supreme Court just issued a ruling letting Trump fire members of the Independent Consumer Product Safety Commission. So which side is right? Should we actually want an independent Federal Reserve? Or should we want a Federal Reserve that's accountable to the public and its elected officials, even if you hate those particular elected officials who happen to be in power right now? When you think about it for more than 5 seconds, it's actually a fairly complicated question, one we're going to unpack with two differing voices today. One of those voices is Matt Stler, the director of research at the American Economic Liberties Project and the author of the great newsletter, Big. He says that considering the Fed's record, we shouldn't want it to be independent of political pressure.
You can't have a democracy where trillions of dollars of choices are set behind closed doors and there's no way or very limited way to affect them through elections. There's just not accountability there.
Then again, Nathan Tankus, author of Notes on the Crisis, argues that for all the justifiable criticism of the Fed, letting Trump in particular destroy its independence could accelerate Trump's rampage that's laying waste to the government.
Because the overwhelming crisis I see is the constitutional crisis over the separation of powers between Congress, between the presidency, I do feel some inclination to defend the Federal Reserve's agency independence.
Up next, we start with Stler's argument that you should ignore all those pundits and politicians decrying the end of Federal Reserve independence. That's coming up after the break. Welcome back to Lever Time. I'm talking with Matt Stler, the director of research at the American Economic Liberties Project and the author of the newsletter Big. He argues that keeping the Federal Reserve independent of political pressure is actually bad for democracy and the economy. But first, I wanted to get some background on what the Fed is actually responsible for. For those who don't know, what the Federal Reserve does, or at least what it's supposed to do.
Don't talk about it.
Yeah, exactly.
You could hurt the markets. Don't talk about it.
Right.
Sorry, I'm just going to yell at you.
It's okay.
Nonstop.
It's like this very mysterious institution. So just briefly, What is the Federal Reserve? What is it supposed to be doing?
So the Federal Reserve is the government's bank, and it prints dollars, it destroys dollars, and manages the amount of money in the economy. Practically, what that means is that it is effectively a price-setting agency over every loan or bond or thing or financial instrument. It chooses the price of all of those. And the mandate for the Federal Reserve, so what Congress said your job is to the Fed, is that they have to do what's called stable prices. So don't let there be too much inflation, and full employment. So make sure that most people have a job. The Fed is a big bank regulator, and it prints money, and it says to banks, here's what you can do and here's what you can't do. Now, obviously, banks are very powerful, right? And Wall Street is a bunch of banks. And I mean, you have all of these different things like hedge funds and private equity.
A lot of people presume that the Federal Reserve has always been, quote unquote, independent, or at least the chairman of the Federal Reserve is appointed to an immutable term that can't be interrupted, with really no executive branch control beyond the nomination of the chairman. But as you report, that's not always been the case. There hasn't always been a so-called independent Federal Reserve.
There have been fights throughout American history. You can go back to the founding about whether we should have a government bank or not, who controls money, who defines what a dollar is. The word populism actually comes from a political party called the Populist Party in the 1880s and 1890s. These were a group of farmers largely who had very strong views on the definition of money. And ultimately, their movement led to the creation of the modern Federal Reserve. There has always been fights over who controls money, who can set terms for how much you can borrow or lend and what the price is. So in the late 1970s, this guy named Paul Volcker, who Jimmy Carter was having all sorts of problems in his administration. And he was told in like 1979, hey man, Wall Street's really mad at you. You have to do something about that, because otherwise they're going to keep causing more inflation. And so he appointed Paul Volcker to take over the Federal Reserve. And Paul Volcker ushered in this period of what we now consider Federal Reserve independence. And there are sort of two ways to characterize Federal Reserve independence. One of them is, as you noted, which is that it's really hard for the executive to have direct control over the Federal Reserve. He can't fire the chair. He can't fire board members who the Fed has certain appointed officials that make decisions, and the president can't fire them. But what we really mean by Fed independence, because all the stuff that I just said that applies to the Fed also applies to things like the Federal Trade Commission or a whole bunch of other regulatory agencies, and no one cares about the independence of the Federal Trade Commission or any of these other agencies. Nobody talks about it in this sort of mystical tone. It's just a kind of legal dispute. But the Federal Reserve independence, you hear people talk in mystical terms, like it's this magical thing. And what it really is, in the late 70s, Paul Volcker was put in there by Jimmy Carter and Wall Street to represent Wall Street. And what he said, and what effectively people accepted, and this is part of what we call neoliberalism, is that the Fed is essentially going to be controlled by Wall Street. And they're going to make decisions to make sure that Wall Street gets to run the credit engines of the United States. And this is not like a conspiracy. This is the way that they thought this is good for America, right? We had too many constraints on Wall Street. During the New Deal, they called it what was called a capital shortage. So it was too hard to start companies. It was too hard to borrow. And by letting Wall Street lend again, you saw the creation of all sorts of innovative new businesses. You saw like a whole tech explode. CNN was created with junk bonds. Also, all of this sort of modern America, the way that a lot of people understand modern American power, came from this idea that whatever happens with the presidency, whatever happens with Congress, these elected positions, real policy in America is run by this independent agency, the Fed and Wall Street. It hasn't always been this way. In fact, when FDR took over until 1951, the president directly set interest rates. So the president told the Federal Reserve chair what to do. Not that he could fire the chair. The legal arrangement wasn't very different. But that was just understood how it worked, right? Federal Reserve independence as a mystical thing didn't exist. And then prior to 1935, the Fed was reorganized in 1935. When it was founded in 1913, until 1935, the Treasury Secretary was actually the ex officio chair of the Fed. So it wasn't like this idea that the government, the executive branch and the Fed should be totally like distinct. That's not how legally, it just wasn't that way until 1935. And then the sort of modern kind of mysticism of Federal Reserve independence didn't really happen until the late 1970s. And in between 1950 and late 1970s, it was a little bit of a gray area where there would be push and pull between the executive branch and the Fed. But like the Democrats, if you look at their party platforms in that period, they had views on interest rates. So there was like, we're the party of low interest rates. The idea that like the Fed should have control over pricing and we shouldn't say anything, that would have been like insane to most Democrats until the modern political party that we're in today.
And broadly speaking, the idea is to sort of separate the Fed's power from the whims of electoral politics. At least that's the way it's presented.
Right.
You've argued that such independence is actually bad and anti-democratic. You wrote that, quote, Trump, yes, even Trump, will do a better job at managing the central bank than a leadership group insulated from political control. The question then is, why do you think elected leaders would do at least as good or bad a job as the current Federal Reserve? What do you make of the arguments for independence, that this current construction of independence at least creates stability?
Right. It's hilarious. Like, yes, it's so stable. Like there have been no financial crises in the last. It's all good. We're all good.
Everything's
right?
been great.
It's totally fine. So let's just live in like pundit world for a second. So the Fed, when I say they print money, they have a balance sheet. So they literally print dollars. And so back before the financial crisis, their balance sheet was about $1 trillion. And what they do is to move the price of money up or down, they buy or sell bonds, right? And if you buy enough bonds, the interest rates go down. And if you sell enough bonds, the interest rates go up. And it's just, that's the price of money, right? And the Fed can buy pretty much anything it wants. And so during the financial crisis and then during several other financial crises during COVID, its balance sheet expanded to about $9 trillion, right? These are like unfathomable amount of money. This is just like insane, right? You can't conceptualize this amount of money, but we're talking like $10,000 for every man, woman, and child in the United States, something like that, or $30,000. So this is the amount of money they're playing with. And it's weird to me that like we have all of these debates over how much money the government can spend or not, like the Inflation Reduction Act, which was not remotely this amount of money, or the recent tax cut from the Trump administration, which is not that amount of money. And those have to go through like really vigorous debate and scrutiny and political attacks and criticism. They have to be stress tested. But the Fed can make these decisions, and it's just like they make them in a committee called the Federal Open Market Committee. It is private, secret. They release like a summary of the meetings afterwards and some of their materials, but the actual transcripts are a 5-year delay. So you don't get to see the transcripts of what was said for 5 years. That to me is like crazy. You can't have a democracy where you have these trillions of dollars of choices are set behind closed doors, and there's no way or very limited way to affect them through elections. It's just not, there's just not accountability there. Now, the consequence, the practical consequence of that is that if the president, if a core problem in our society is price levels, then the president is really limited in what he or she can do. The president is limited on a theoretical basis, on a practical basis, from what he can do about it, because it is the mandate of this institution that is insulated from political influence. That's their mandate to do stuff about it. And under Biden, like you saw this, and it was really bad when there was inflation, there was this passivity in the administration because they were like, well, that's not really our job. And to me, that's a really big problem. If voters want someone to take care of it, and the Fed is like, I guess we'll try maybe. And then the executive branch is like, well, it's not really our job. What is really happening is it's no one's job, right? Or the Fed might think it's their job, but they're not hearing from voters because it doesn't really matter to them. And you've seen this consistently for the last maybe 40, 45 years. there's been really just bad management of our banks, really bad management of our financial systems. You see the Fed talk about things like low interest rates. Interest rates are low, but it's like if you borrow money from a credit card, like you're paying 30% interest rates, right? And that's happened in the era of Federal Reserve independence. Remember the speech that like Janet Yellen gave in like 2015 or 16 when she was the chair of the Fed. And she gave a speech where about like when the Fed buys and sells bonds, it's called the monetary transmission mechanism, right? How does what the Fed do translates to you and me borrowing money in the terms we have? And she was like, we've noticed something weird, which is that if you're a big company, you have different borrowing terms than if you're a small company. Maybe we should look into that. And that's like what she said. It was like crazy. I mean, it's much more boring the way she said it, but like it's crazy. And that's because they don't have a real feedback mechanism to the actual people who are dealing with the impacts of the policies they make. All of the people who make decisions on the Federal Open Market Committee are millionaires. And in fact, some of them are not even appointed by the president, which is insane. And we don't have to go into the structure of the Fed. It is not designed to take in real feedback from ordinary people. It's designed to take in feedback from like economists filtered through their models. And those models haven't been very good for a really long time. And if you just go back, generally speaking, elected leaders, even bad elected leaders, are responsive to the public in a way that those same people, if they were in an unelected position, weren't. So we're really not talking about like, oh, Trump is a good guy and he'd do a good job. We're talking about, is Trump's Fed, would that be better than Jay Powell, who is really trying to pander to Trump anyway, but is also trying to pander to this other set of stakeholders, Wall Street guys and bankers, but not actual normal voters, right?
Yeah, and I want to talk specifically about Jay Powell, because there's the idea of Fed independence, which you could, so-called independence, which we can debate as a concept. And then there's the question of what about Jay Powell in specific? You wrote about, for instance, Powell's decision to raise interest rates, which ended up enriching the big banks by about $1 trillion. That's not me talking. That's the Financial Times. That's
communist,
basically
communist rag.
Yeah, right. Exactly. I mean, it's about the idea that banks were able, through the Fed's interest rate hikes, allowed banks to charge more, a lot more, for borrowing money, but the banks did not pay out depositors significantly higher rates of interest on their deposits. So the banks made more money on the spread, which was essentially a wealth redistribution from regular people, $1 trillion worth, to the banks. Jay Powell his Fed was the one that said Silicon Valley Bank does not present a systemic threat to the economy. And then 2 years later, when Silicon Valley Bank collapsed, he cited the alleged systemic threat to the economy to bail out the depositors. I think my question is, in specific with Jay Powell, do you think there's a case for Trump to fire Jay Powell for cause under the law?
Well, I mean, cause is not a very well-defined legal term, and I'm a fake lawyer anyway. So I think if Trump wanted to do it, he could do it. Jay Powell's a private equity guy. I think he's very incompetent as a Fed chair. The Fed's generally been wrong about most things. They missed inflation. That's their big thing. I mean, I think you could argue he's been incompetent. I don't know that you could argue he's engaged in fraud, but I've increasingly come to believe that the question of whether he can be fired is actually less important than it seems. Because what his term runs out and Trump is going to appoint someone, and he's going to appoint a Trumper, right? He's going to appoint someone who agrees with him. And so it's like, okay, whether he fires Jay Powell or not, he's going to get his guy on there and they're going to rearrange the Fed to do what Trump wants. And that is the end of Federal Reserve independence anyway. So we're in a situation where like it's gone, it's done. And I'll note one other thing, which is for people who don't like Trump. So if you think that Federal Reserve independence is a really important thing, well, ask yourself whether it's a good idea to have the Trumper, whoever Trump puts on the Fed, as chair of the Fed, if a Democrat wins in 2028, and that for the first year, that person is going to have to deal with that person who's, I think it's pretty clear, he's going to be aligned with Trump. He'll probably try to sabotage whatever the Democrats try to do.
I do think when the Democrats have been in power, the argument you just made have been floated out there that independence isn't all that great because, as you said, the president gets held accountable for the things he or she doesn't necessarily have power over. There's the idea that Jay Powell destroyed Biden's presidency, et cetera, et cetera.
It's like if you had two people driving a car with each of them had a steering wheel and they were trying to turn in opposite directions. It's a real problem. And it's something we need to address. And I want to actually talk to why it's a specific problem for the Democrats. Okay.
Please.
Because I think that one of the things that is really important if you're going to have a coherent class-based argument about political economy is you have to have a view of money. You have to understand, like you have to say, how should we run a banking system? And the way we used to understand how to run a banking system is that what you want is for normal people to be able to borrow money at reasonable rates, right? And if you want to speculate, it should be really expensive to borrow money, right? Because we think just pure speculation is a bad activity or is like unproductive. So it's like if you're gambling in high finance, you shouldn't be able to borrow really easily. And, the Fed is in charge of these choices. This is Silicon Valley Bank. We can go, I don't want to go into like depth on what they did wrong, but like it's pretty obvious what they did wrong. And they bailed them out instantly. And they do that with anyone who's close to speculators. They bailed out the Bass brothers in the 70s. This is something that Paul Volcker did, who tried to corner the silver market. It's like the movie Trading Places. That was actually, I don't know if it was based on the Bass brothers, but they tried to corner the silver market. They almost broke the stock market and Volcker bailed them out. Meanwhile, the whole economy in the early 80s was getting crushed by high interest rates and normal people didn't get a bailout. And you see that over and over and over and over and over. And that is the architecture of independence of the Federal Reserve. So we really have to break this sacred cow and say, okay, yeah, we are going to say that Wall Street shouldn't run this thing. And now we have to figure out how to do it ourselves.
Yeah.
Get a bunch of people. We all have experience with money. It's just like either not having it, which is like most of people's experience, or having a lot of it. And I think that what we really need to do is start recognizing that people that don't have any money have an interest in a different kind of credit system. And we should build a politics around that. I think Federal Reserve independence is fundamentally designed to stop the creation of that form of politics.
I do think this whole debate surfaces this actual fear of democracy. Fear or even arguably loathing.
Yeah.
I think the Wall Street folks, the sort of elite pundit class, it's an actual explicit loathing. Like we don't want disgusting herds of voters to have any say over this set of policies.
Right. It's Hamilton, right? I mean, that's really the people
Yes.
who love Alexander Hamilton never bring up. He called democracy a disease once. There's a belief that the people, what is it, the history of the world, the people are revolting, right? They make me sick, right? Like that.
Right.
But,
like,
look, equality is a really scary concept. It really frightens people. It is a fear of equality. It is a fear that the guys in suits don't actually know anything more than you do.
Right.
And the idea that no one's running the world is really scary.
Yeah, right.
And I think that's the fundamental problem that we have to overcome. It's like, guys, there's no one running the world.
Right.
It's just us.
There's no man behind the curtain.
There's no man behind the curtain.
As my therapist once said, keep calm. Nothing is under control.
Right. There we go.
Matt Stler, as always, thanks for being on the show.
Hey, thanks a lot.
Matt Stler is the Director of Research of the American Economic Liberties Project and the author of Goliath, the 100-Year War Between Monopoly, Power, and Democracy. I highly recommend that book. I also highly recommend his newsletter called Big, and of course, his podcast called Organized Money. Coming up next, we're going to hear the other side of the argument that letting Trump end Federal Reserve independence may accelerate his authoritarian takeover of America. That's after the break. Welcome back to Lever Time. You just heard the case against insulating the Federal Reserve Bank from political pressure. In my opinion, it is a compelling argument. And when you think about it, it's actually kind of insane that there's this super secretive, all-powerful bank running the entire economy, and yet here in our supposed democracy, we the people have almost no control over any of it. Donald Trump being the one to end Federal Reserve independence, as my kids might say, that seems a little sus. Not just to me, but also to a guy who's been following what's really at stake when we talk about America's most powerful financial institution.
My name is Nathan Tankus. I run the media outlet Notes on the Crises, which I started in my living room essentially on March 2020 as the coronavirus pandemic raged.
Nathan Tankus' Notes on a Crisis is among the best dispatches we have from the coronavirus pandemic and its ensuing economic crisis. Tankus is hardly some Federal Reserve apologist, but he's also worried that Trump in particular being the one to end Federal Reserve independence is incredibly dangerous because Tankus says it's part of a larger plan to concentrate more and more power inside the executive branch. I called up Nathan Tankus to try to parse all of this out. I started the discussion by asking him what he makes of Matt Stoller's overall argument that a more democratically controlled Federal Reserve, even under Trump, is better off than a fully independent agency.
There are aspects of that argument I agree with, but I've long thought that this argument missed the mark somewhat on what was really going on with the Federal Reserve. To me, what is so remarkable about this moment is that the Fed is so isolated. The Fed has no allies. Obviously, there's like banker and institutional aspects, but in terms of the federal government, it has very little allies. Most importantly, from my point of view, they have no allies among the rest of the executive branch, the rest of the agencies who have been dealing and navigating with the Trump administration's demands on them. And so what is remarkable to me is that the Federal Reserve and the people who speak bromides about central bank independence, they're waiting for Trump to attack Powell before they circle the wagons a little bit. But in many ways, the battle over the Federal Reserve right now isn't a battle about central bank independence per se. It's about the concept of agency independence, which is not some special, unique thing of the Federal Reserve. We have many agencies that are supposed to be putatively independent who have been subject to major attacks. You know, people at the Federal Trade Commission being arbitrarily kicked out of positions, and the executive branch, the president, has a trump card. The president can just say, oh, we can do whatever we want, even if you explicitly pass a law that is supposed to restrict the president's control over a set of activities in the executive branch. And that's what we've been seeing. They've been knocking through all sorts of protections, independence, all sorts of data protections, which are supposed to protect one agency from not having use and being able to weaponize the data of another agency. They've been breaking through all of that, and all in legal terms, in actual legal terms, rather than vague ideological conversations about central bank independence, the practical protections that the Federal Reserve Board as a government agency has from encroachment on its activities by the president is the same independent agency protections that everyone else has. So I'm very critical of the Federal Reserve as an institution, the roles it plays in our politics. But for me, it is not the fact that the Federal Reserve Board is an independent agency that's made it so difficult to have democratic accountability of this institution. It's been the ideology of central bank independence, where economists essentially invented their own version, amateurish version of administrative law, and then did two things, which is separate the defense of the central banks from other parts of the administrative state, or parts that arguably are more important, like the CDC, and thus weakens and lost the plot on what the actual major important things in American life and for the last 4 or 5 decades. And then among an elite conversation that the central bank deserves this unique deference that we don't give any other independent agency. And this deference is it's not so much a deference from, oh, the president having influence over interest rate decisions. It's a widespread deference over the idea that monetary policy is a part of economic design, economic planning, and that we have, Congress and our wider society have real debates and conversations that should be had about what parts of the federal government are best suited to respond to certain problems. And to me, The crisis that we're in right now, or the moment that's happening right now between Powell and Trump, is symbolic of the dead end of central bank independence ideologically. And they've made their own bed by not dealing with, well, maybe we could do economic policy in different ways and be supportive of other agencies taking on more of the economic policy making role from them. And they've become so big, so important, so load bearing that they're collapsing under their own weight. But nevertheless, the solution in the past is not to double down on executive control as the bastion of democracy. It's to bring the central banks back down to earth. And there is an argument for having a certain degree of independence for this agency, but the central bank independence idea is so much wider. It's essentially that the central bank should be able to plan our whole society, and this leads to exactly the kind of problems that you could imagine. But in this moment, frankly, I feel in a position where, because the overwhelming crisis I see is the constitutional crisis over the separation of powers between Congress, between the presidency and the judicial branch, which is completely out to lunch, I do feel some inclination to defend the Federal Reserve's agency independence while also admonishing the short-sightedness of leaders in this area for thinking that they could defend their own discretion and own prerogatives without coming out defending everyone else. Like, Powell should have gone out swinging as soon as people were being fired from independent agencies that Trump has no legal authority to fire. That is the moment you have to stand up like, this is a fundamental threat to the functioning of our system, yada, yada. And it's telling that they didn't. It's also telling that the Federal Reserve has been conceding in advance, similar to other institutions. It left the green central banking, basically this alliance of central banks that were supposed to be even at least nominally focusing on climate change. It left that before even Trump was inaugurated. Its vice chair of supervision, Michael Barr, stepped down in advance, basically to give Trump free rein to be able to do what he wants on financial regulation. So the Federal Reserve has already been conceding much of its independence in advance. And as we're seeing with every other institution, when you roll over for Trump, he, just kicks you while you're down and takes even more.
Okay, so what I hear you saying is there's the debate over whether a central bank, in this case the Federal Reserve, should be independent. I put that in quotes. And then there's the debate over whether essentially Trump, or whether we should allow Trump to be the one to essentially end that independence because it's part of Trump's larger unitary executive aspirations. To bring these 2 points together, maybe it's like both. Maybe it's that Donald Trump's intentions to end central bank, Federal Reserve independence is motivated out of something bad, nefarious, not laudable, and dangerous, but that nonetheless, the idea that the policy decision-making of the central bank should be essentially insulated from the democratic, small d democratic parts of our government, that is bad, right? Like maybe his intentions are wrong, but maybe nonetheless the result of his argument is correct, even if, by the way, even if we don't like what he would do in controlling or more controlling the Federal Reserve, right? Like maybe two things are right at the same time here.
I think there's an element of truth to that, but I also think economic policy, it's about design. It's about deliberative debate, and you have to build a structure that works. And my concern is I don't see it as more democratic to have Trump capriciously take the reins under the theory, well, he was elected. But to me, democracy is also about deliberation. And I think that the questions around economic policy and around monetary policy are so big that we need a stronger deliberative body this time.
And meanwhile, by the way, the Federal Reserve is making decisions in the Open Market Committee, and we only get the summaries, and we don't really get to see it until 5 years later, right? That's not exactly an open deliberative body either.
Yeah, I mean, this is part of the awkwardness for me is I'm so disinclined to defend the Federal Reserve from here, but I think as powerful and as I'm definitely, I've spent my time following the Federal Reserve. I got 30,000 of pages of minutes from the late 60s and early 70s that never were released. I'm a huge believer in the accountability of this institution, that it needs much greater accountability. But I think ultimately we need to both change the culture around this conversation, and turning Congress more democratic and more deliberative, I think, is the only ultimate solution. And given that what is happening with the Fed is in the context of so many different executive branch moves, given that it's the context of so many different executive branch moves where they're just crushing through, at this point, it seems to me it's not a huge amount, but by degree, making the society less democratic by having these powers being just capriciously sucked into the executive branch, into Trump's direct decision making, especially as his decision making has been so erratic and so dangerous already in terms of the payment system. I've been calling a lot of my writing through line I've been calling it the Trump must payments crisis, and it's because they're using their operational control of the payment system to directly debit money out of, say, New York City's bank account, and God knows how many other bank accounts at this point, all sorts of other capricious control. And while it's very unlikely the Federal Reserve was ever going to step up to that, I think having more direct operational control of our country's payment system by the Trump administration, by the White House, is not a good thing and not going to lead to any further democratic accountability. So I think, like the old Churchill line of democracy is the worst option except for all the others, Congress is the worst option except for all the others in this case. And obviously, when we talk through that, it's a sign of what a bad situation we're in when we talk through the failures of all these different institutions. I will say one thing I do think that I will go on a limb on is Trump has a point about interest rates and payments on government liabilities, the interest on the debt, quote unquote, as people like to talk about. He has a point. And now, of course, he's thinking like he is. He's not thinking like a system designer. So there's other mechanisms that would need to change, other things that need to change about policy if we're going to lower interest rates and lessen how much interest payments come out of the federal government and into private sector hands. But he has a point on that. And a lot of the things I've been writing about the last 3-4 years, I had a whole report on monetary policy about this, was other ways that you could tighten monetary policy using, say, financial regulatory tools, which he's just totally ceding to Trump, or which Powell is just totally ceding to Trump, and use those in combination so that you could have lower interest rates, but still, if you think you need to tighten economic policy, still be able to tighten. And the Federal Reserve has dodged those kind of debates around monetary policy redesign. It has totally avoided those debates. It's not just generally higher interest rates, but it's also interest. It's just how they've specifically gone about designing monetary policy has involved them just giving interest for free to bankers just because they have a balance in their account at the Federal Reserve, and including on quote unquote required reserves, i.e. that they just have to hold for some regulatory reason. Well, we're going to compensate you and give you the interest because you have to hold this lower yielding asset. We could have just not done that. There's plenty of ways monetary policy still works and is still designed that wouldn't have done that, and it would have meant less interest going out into the private sector and into the wider economy, and wouldn't make this something that Trump can hammer so hard. And we used to deal with these questions. Even when people were making their own kind of arguments for central bank independence in the late 40s, they would take these kind of questions seriously about interest payments and the quote unquote the public debt, treasury securities, and so on. And those kind of conversations, those kind of debates, we just don't even really have that debate in this country And now that they've kicked the can down the road until they found a bully like Trump, who's going to find something and keep on hammering him. And in a certain sense, it's almost academic whether we wait 8 months for Powell to leave or not, because clearly this campaign sets the stage for the Federal Reserve to be whatever the institution that Trump wants it to be when he appoints his lackeys, who until recently spoke very highly, spoke all the bromides about central bank independence, and now are just like, yeah, let's have Trump involved, let's have a Treasury Secretary on the board, which also reflects the kind of falsity of these ideas. It's, when it was cheap, when it was easy, when the institution was already doing what you wanted to do, or you had no other partisan political pressure not to, you say, oh yeah, I believe in central bank independence, and then suddenly becomes partisan and you want to be on the right side of Trump, then you go, well, or no, I'm actually on the other side. And so to me, a lot of the problems with central bank independence are just to be frank, like Democrats who just believe in who just get told that this is important and by inclination just believe whatever Federal Reserve or Federal Reserve staffers tell them. And Congress could have taken the idea of redesigning how monetary policy in this country works more seriously at any given time, but it was not inclined to do that for various political reasons. And then that is explained by, central bank independence, but it's really just cowardly, unimaginative, corrupt politicians. And it's just sort of, it's a way of obscuring what the real issues are rather than focusing on them or giving them the proper attention.
Nathan Tankus is president of Notes on the Crises. He's written for the Financial Times, Business Insider, Politico, The Guardian, and many other publications about monetary policy, economic policy, the Federal Reserve. You can follow his takes, which I do, at crisisnotes.com. That's crisisnotes.com. Nathan, thanks for being on the show.
Thank you for having me.
Thanks for listening to another episode of Lever Time. For the full ad-free, unedited interviews with Matt Stler and Nathan Tankus, check out the Lever Time Premium feed exclusively for our paid subscribers. To learn more about Matt Stler and Nathan Tankus' work, we link to them in our show notes. Lever Time is a production of The Lever. This episode is produced by Ariella Markowitz. It was edited and mixed by Ron Doyle. You can subscribe to Lever Time on Apple Podcasts, Spotify, iHeartRadio, the PRX mobile app, or wherever you get your podcasts. And one more thing. For ad-free episodes, exclusive bonus content, and access to The Lever's entire archive of investigative journalism, please consider becoming a premium subscriber. Head over to levernews.com to learn more about becoming a paid subscriber, or click the link in this episode's show notes. I'm David Sirota. We'll be back next week with another episode of Lever Time.